people have heard about porting a mortgage. And what does it even mean? Are we in an episode of Star Trek? Well, don't worry, we're here to help. And in today's video, we'll be talking all about porting or transferring your mortgage to another property. Hello, welcome back to our channel and podcast. My name's Gemma, and here at WS we talk about all things relating to money, mortgages and positive money mindset. So if that interests you, then be sure to subscribe to our channel and hit the thumbs up. It really helps with our YouTube algorithm and means that you won't miss out on any of our videos. On today's episode of Let's Talk Money and Mortgages, we have Iftikhar joining us once again. And if you don't know, Ifti is a trained accountant and mortgage broker who has been in the industry for over 10 years. And he is also one of the founding directors here at WIS. Hello Ifti, how are you today?
Hi Gemma, I'm very well, thank you. How are you doing?
Very good, thank you. So today we are talking all about porting or transferring your mortgage. So let's get into it. What does porting a mortgage actually mean?
Okay, cool. This is often associated with people moving house. Right. So often what happens is when people move house, they sometimes don't break their mortgage deal. They move the mortgage deal across to the new property. So for example, let's say somebody had a 200,000 property, and let's say they have 100,000 loan, the mortgage on the property. So let's say you're buying a 300,000 property, they will move this 100,000 across to the new property. And let's say maybe do a top-up mortgage on top of this 100,000, right? So that's what they normally do. So effectively, you're moving a mortgage across from one place to the other. You don't necessarily have to have a top-up mortgage, but for some people, if they're upsizing, they will do it. But sometimes people don't need to top it up, right? So yeah, so porting has advantages for sure, right? So that's what people will do about.
Yeah, okay, Ifti. And just to clarify, when we say about the deal, we're not talking about the term of the mortgage, are we? We're talking about if somebody initially got a 2-year or a 5-year deal at a fixed rate, that's what we're talking. If they want to break that in between the 2 years, or if it hasn't come up yet, that's when we're moving it.
Yeah, that's right. So if they don't want to break it, they can move it across to the new property, provided the bank allows you to do that. Most banks do, but so provided they allow you to do it, you are allowed to do a port.
Okay, so why would you port your mortgage? What kind of person would do that?
So people port mortgages for two reasons. So one thing is, now this is the most common one, people go and take a 5-year deal, right? So at the time they think, oh, we won't move house, let's go for a 5-year deal. It's a good deal, let's go for that, right? But priorities can change, right? So after 2 years or maybe 3 years, they say, oh, you know what, I now have to move to a different area because I've got a new job there, and they have to move house. So if that happens, if you break your mortgage deal, when you sell the house, the bank will charge you a penalty, and that's called an early repayment charge. In our world, we call it an ERC. So there is an ERC associated with most of the mortgages, right? So if you don't want to pay the ERC, one of the options you have is porting. So that's why it's popular, because ERCs can be bad, right? Some lenders charge about 5%, right? So let's say you have a 500,000 loan, right? And if it's 5%, it's 25,000 pounds. It's a lot of money, right? So people will do that. They'll port, right? So that's one of the reasons why people will port. And the second reason why people will port is a classic example I always use, is because the interest rate itself. You might be on a fantastic deal. Now, I've got a client who has an old deal with the bank. He's on a sort of a lifetime tracker, and he pays 0.5 over Bank of England base rate. So in today's terms, it's 0.6% is your mortgage interest for him, right?
Wow.
You'll never get that deal anywhere else, right? So he's bought his house. He did a top-up mortgage for the rest, but he ported across the old mortgage because we couldn't match that rate anyway, right? So it worked out cheaper for him. So you probably sometimes want to take across your interest rate that you currently have. So those are the two main reasons why people will want to do a port.
Okay, so then what might be the disadvantages of porting, if there are any?
Yeah, there are some disadvantages of porting. The main disadvantage is you're kind of stuck with the same lender. So if your current interest rate is 2% and there's a good deal in the market for 1.5%, you're not getting the benefit of that because you're kind of stuck with the same lender. So that's one of the disadvantages you have. And the second disadvantage is something that a lot of people don't realize. So what happens is, let's go to the example I used before. somebody is trying to buy a 300,000 property. Their current mortgage is 100,000 and they need another 100,000 mortgage, right? So let's say their current deal finishes in a year's time from now. And quite often bank gives you a 2-year, 5-year or a 3-year deal, right? So your top-up mortgage often can't be matched against this. So your top-up mortgage may be for another 2 years. So then you're kind of stuck with the same lender. And when you're stuck with the same lender, also what happens is, in this case, he or she will probably have to pay 2 product fees, right? So now to get this new deal, he'll have to pay another product fee. After 1 year's time, they may have to pay product fees. And because they're having 2 products, it's difficult for them to come out of that same lender without paying a penalty. So you might avoid penalties now, but it doesn't necessarily mean you avoid penalties forever. So this is where, you probably want to speak to someone. Don't think, okay, this is my only way, because you have to consider things like this before you make that final decision. I'm not saying porting is bad. It works for a lot of people, but it doesn't work for everybody. For some people, it doesn't work at all. So you definitely want to speak to an advisor. So those are the reasons why porting sometimes has problems.
Yeah, but it's not every mortgage that comes with early repayment charges, are they? Is it mostly for fixed rate
it's mainly for fixed rates that you have early repayment charge. So if you are having a variable rate like a tracker, sometimes you can get away. But be mindful, not all trackers come with an ERC product. Some banks do have that facility, but some of the latest tracker products I've seen has early repayment charge. So by default, just because you're on a tracker doesn't mean that you don't have an early repayment charge, right? But that's kind of what the expectation is. Be careful. That's why I'm saying you probably want to get some advice if you're in a subject like this.
Yeah, definitely. So would you say there's anything else to look out for when you're porting your mortgage?
Yeah, there is a few things you have to be mindful. The main thing that you have to be mindful with the port is each lender is different. Different lenders look at ports in different ways, right? So for example, let's take this early repayment charge. And, I used a 500,000 example before. Some lenders, in that case, that person had to pay 25,000, right? Some lenders, at the time you port, they will waive off the early repayment charge. So which is good. That's what you want. But some lenders will say, please pay the 25,000 and claim that back as a refund, right? So, quite often...
So they've got to find the money to pay it and then they'll get it back, but you still got to have the cash.
Yeah, so it depends. From lender to lender, this varies. So you have to be very mindful. Porting is a bit of a tricky subject. Again, you got to go through your contract, talk to lenders. That's when people like us or advisors come to the picture, because they can make sure that it won't cause any problems. And they will tell you what are the things you have to be mindful of, right? Because quite often, we find that most people buying houses, by the time they buy their house, they're skint, right? They just do not have any money. So, if you have to pocket out another 25,000, that's a surprise you wouldn't want last minute, right? So you have to be very careful with this.
Yeah, definitely. And I think, as you were saying, that's why speaking to an advisor is such a good thing, because I don't think a lot of people think about the near future. Like they've got their mindset on a house and a budget, and they're like, this is what I want and this is the mortgage that I want. But actually, if things are going to change, then it can benefit you massively to know that and plan for it in advance so that you're not stuck in a deal that you don't want to be in a few years' time.
That's right. Yeah.
So with that being said, are there any alternatives to porting?
Yeah. Okay, I think you've answered part of the question there, right? So I think people should come to a habit of speaking to an advisor. Let it be a mortgage advisor, let it be your bank. You need to speak to an advisor. The idea is not just to get a mortgage, right? To sit down, discuss your plans, right? A lot of people don't foresee that. So if you've got kids, young, they'll have to go to school, or some of them will have to go to secondary school. Your job might change from time to time. So those need to be taken into account when you go for a mortgage. Quite often people say, just go for a 5-year deal because, the deals are great, right? People like that, things can change in 3 years, in 2 years. I mean, I don't know what will happen in the next 2 years, 5 years, God only knows what will happen in 5 years, right? So you have to take into account all this when you decide on your mortgage. if you think there are sort of changes expected, you probably not want to go for a long-term deal, or like you mentioned earlier, maybe you might want to consider a tracker. So with a tracker, what happens is some trackers allow you to come out without a early repayment charge. So that could be an option. Always I suggest speak to a broker. So trackers might be an option. Those are the kind of options you have instead of porting. So I think planning in advance will be the best option that you will have.
Yeah, I know that some companies are offering longer terms than even 5 years and say 10-year deals. And, you know, it might be someone's idea like, oh, okay, I like the idea of it being fixed for that long.
Yeah.
But is it true that if it's a term that's longer, then potentially the money that you'd have to pay back if you port would be significantly more?
Yeah, so the problem with the longer term deal is bank commits, right? They say, okay, irrespective of what happens in the market, we will offer you, say, 2% interest rate, right? So they are willing to commit. So they've sort of made up their mind that they're going to make a pot of money, right, at the end of the term. But in between, if you come and say, sorry, I have to break the mortgage, they're not going to make that pot of money. So that's why they will always have a ERC. And of course, you know, there are some legal reasons behind this as well, because if you are doing a fixed term mortgage, there are certain insurances attached to that. So given all that, longer term deals come with a bigger early repayment charge. So for people like that, porting, you know, sometimes if you're on a 10-year deal, porting might kind of be your only option as well. So it really varies from person to person, right? So that's why I said these can be a little bit more complicated than what you think. So it's always best to get some advice around this before you go into a mortgage. And if you're on one and thinking of moving house, it's good to get advice on this area as well.
Yeah, it's just good to be mindful, isn't it, when you're having your discussion with your mortgage advisor, how much the early repayment charge would be if the situation was to change, right?
Yeah, definitely. You want to be mindful because that's one of the requirements. Mortgage advisors, they will give you something called a key facts illustration. On that, you will always say what the early repayment charges are, and it will also explain to you about porting as well. So those will be available. But of course, those are summaries. But if you want further details, advisors can talk to you about that in detail.
All right. Well, thank you, Ifti, again, for some more great advice. I just wanted to put a reminder out there that these points may or may not be applicable to everybody. So please do talk to an advisor if you're unsure if they're suitable for you. And of course, if you don't have an advisor, we are always more than happy to help. And I'll leave our contact details below. And another reminder that as a mortgage is secured against your home or property, it may be repossessed if you do not keep up with the mortgage repayments. Thank you again for joining us today. We'll be back next week with another episode of Let's Talk Money and Mortgages. Have a great day, stay safe, and we'll see you again soon.
Thank you.